Hey guys, it's Yuki and welcome to this week's episode of Invest Roundup. In case you missed our previous episode and wonder why we started this show, it's just for a very simple reason. There's so much going on the stock market day in and day out, and there's simply too many market news to keep up with. So what we'll do here is pick some of the most recent and important stock market news, condense those and give you the scope, and all you need to know about what's happening. Disclaimer: whatever stock or news we talk about is not a recommendation to buy or to sell. These are just news we deem important, things we think you need to know if you're interested in the stock market or if you intend to invest. First news item: an IPO hit emergency brakes. What was supposed to be a historic event came to a grinding halt last week when Ant Group major IPO was suspended just 2 days before it was scheduled to go public on Hong Kong Stock Exchange and Shanghai Star Market. According to Bloomberg, this derailing apparently happened after Alibaba and Ant Group founder Jack Ma had a meeting with China regulators for supervisory interview. It was later revealed that the authorities had belatedly discovered an array of shortcomings which might require Ant to be overhauled. This had inadvertently thrown the future of Ant Group into doubt. And not only that, it's now causing global investors to question China's consistency when it comes to policy measure and its commitment to a registered IPO system. Ant Group's sister company Alibaba had also seen a 7% dive in its share price since the announcement of the suspension. Experts have said though that what happened with Ant Group is unlikely to be the last of similar events with other tech giants, as regulators are still catching up with innovation from independent payment providers and creators of digital currencies. Other experts have claimed that it was Jack Ma himself who jeopardized his own chances, as he made a seemingly critical comment about China's financial regulator not long ago. Ant Group has since issued an apology for inconvenience caused by this suspension. Second news item: battle between blue and red is impacting the market. After a brutal long week, the US election have finally come to a conclusion. Well, somewhat conclusion. Earlier this week, The Sun Daily reported that US stock future had jumped higher. Since Joe Biden's victory, S&P 500 E-mini future and Dow E-mini were up by almost 1%. Nasdaq 100 E-mini were up by 1.22% and shares in Asia were modestly higher. The market is clearly expecting Biden's presidency to have a more positive effect on trade relations, as previous trade war would be eased, ergo boosting global growth and corporate earnings. According to Business Insider, when Biden's victory was slowly becoming more evident last week, tech stock became possibly the biggest stock market winner. This was followed by financial and healthcare stock. Energy stock, however, traded flat. This is in line with the compilation by Business Times, which have projected that tech stock will flourish should Biden emerge victorious. But like the election drama that is not really over at the moment, the stock market drama is far from done. The race for control of the Senate is still ongoing, which could determine whether the market goes up or down next. According to Business Insider, if the Senate is controlled by Republicans, President Trump's tax cut and deregulation initiative will likely stay in place. CNN had also expressed concerns that the market may soon have an economic hangover. After the election euphoria, due to rising COVID-19 cases and unemployment rate in US, it's physics. The higher it goes, the greater the impact would be when it falls. By the way, before we go on to the next news item, click on the subscribe button below now so you will be informed the next time we upload a new episode. That way, you won't miss any important market news. Third news item: Berkshire Hathaway bought back a record amount of stock. Usually a rather dormant investor, the Oracle of Omaha was recently buying back Berkshire Hathaway shares as he struggles to deploy cash into high-returning assets. Once a stock buyback skeptic, he is now one of the world's biggest repurchasers as his own firm becomes his favorite investment in the pandemic. Berkshire Hathaway stock had climbed 20% in the third quarter, surpassing 8.5% gain in the S&P 500 index during the same period. But even then, the company accelerated its repurchases. Talk about confidence. The company spent the third quarter buying back about $9 billion of its own stock, nearly doubling the record buyback from the second quarter and more than it had repurchased in any full year in its history. This is the biggest buyback so far by a US company after Apple, which incidentally also happened to be Buffett's largest investment. If you think this buyback has broken the company's bank, think again. These buybacks have only chipped away a small part of Berkshire's cash pile in the third quarter with plenty of capital to deploy elsewhere. The increased buybacks could also indicate more optimism in the conglomerate's prospect. He was quoted saying on CNBC, "Berkshire will buy back its stock only if A. Charlie and I believe that it is selling for less than it is worth, and B. The company, upon completing the repurchase, is left with ample cash," which is true in this case. And finally, we move to the exact opposite of stock buyback spectrum. Jeff Bezos is dumping Amazon shares. Jeff Bezos, the founder of Amazon and the world's richest man, sold more than $3 billion worth of his Amazon stock over 7 trades last week, taking advantage of a 75% surge in his company value this year. But this isn't the first time. Amazon didn't immediately respond to a request for comments about Bezos' sale, but even with the massive stock dump, Bezos is still the world's richest man according to Bloomberg Billionaire Index. So if you're an Amazon investor, don't worry, the fundamentals seems like they are still intact. The sell-off is probably just routine. And those are the 4 important investment news we had to share with you this week. Once again, we encourage you to get more information if you would like to act on any of the company we have shared about earlier. Comment below and tell us what you would like to see on Invest Roundup, and share this video with your friends, especially those who have invested in the stock market. See you again soon.